In the last video, we have discussed about the theory of moving averages and how we are calculating the moving averages. Now, in this video, we are going to discuss about how to select the levels for the moving averages. What is meant by level? Like in the last video, I have discussed we are calculating moving averages is equal to 10. Means we are getting the average of 10 candles from the 1 minute chart, right? I explained this example, but now question is time frame. It's a different story that I will tell you which time frame need to select or which time frame we can use. But how to select 10? Like why we are selecting 10, or is there any other number? Because from the infinite numbers, which number we can select? That's the question, right? So for this question, there are multiple authors and there are multiple books. So with the help of that books, most of the authors are suggesting to use moving averages as 20, 50, 100 and 200 with the combinations of 5-minute chart, 10-minute chart, 1-day chart or 1-week chart. Now this 20 and 50 moving averages is applicable for the intraday. If you are checking for the long term, then at least check 100 and 200 moving averages. Now what it means by 20, 50, 100 and 200? These moving average values are playing most important and critical roles while analyzing the market. How? Because this 100, 200 or 50 will act as a support and resistance of the market, because we are plotting this based on the past history, right? And market is always known for repeating his past history. So if we plot the lines, then this line will act as a support or act as a resistance. Now for the intraday, these two are applicable. So how we are utilizing these moving averages? There are total two ways to utilizing. For analyzing the stock, analyzing the support and resistance, and second is to make an entry for the intraday, for intraday or the delivery stages or positional trades. So how to make an entry? For the entry, there is one. For first, let's take a first example, analyzing. How to analyze? Just plot moving averages on the chart and check either it is above moving averages or below moving averages. If it's above moving averages and it's touching the moving averages like candle like this one, that means it will move upside or it is taking support of this moving averages, or we need to wait until it cross this moving average line, whatever the moving average you are chosen, like 50, 100 or 200. Now another strategy is crossover strategy. What is the crossover? In many or multiple YouTube videos, you have seen that, suppose there is a line, suppose you plotted the moving average line which value of 50. Now again you can plot another line like this one, and suppose this value is 20. I intentionally crossing over. Suppose what is the logic behind the crossover moving average trade is, suppose if 20 moving average line is crossing the 50 line, that means in the market bullishness will come and you need to make entry here. Got it? Or vice versa. Suppose 20 moving average like this one and 50 moving average like this one, means again what it means this 20 and this is the 50, this 20 is crossing downside, then you need to make an entry for the bearishness or for the downtrend or put side. That's the theory behind the numbers of the moving averages. Now without wasting time, let's take a live example from the chart. Now this is the TradingView platform. Actually this is the broker platform, but the TradingView we already integrated, or let's say broker integrated TradingView into their platforms. So how to choose? Go to indicators, just type moving averages. Now you will get multiple moving averages plays different roles. But now in this video we are going to discuss about simple moving averages. Just click on moving averages, right? If you click on moving averages, you will get one line here, right? If the blue line. Now select go to setting. After setting, length 9. What is the ninth? The past 9 candles closing price will averaged. So we can change to 20 first, and we can click on OK. Now this line will adjust for the 20 candles of the 1 hour chart. We can choose any, but for now I am choosing the 1 hour just for explanation, or suppose I am choosing the 5 minute as well. That's not an issue. Okay, this is the 5 minute moving average chart. How it is plotted, you already know. It will take last 25 minute candles closing prices and it will plot, and it will move like this one. Okay, now we need to add one more. Again, type moving averages. I'm extremely sorry about the background noise. Okay, if you've heard about some horn, or car horn or truck horns, I'm extremely sorry about that one. Just adjust for this video. Now go to this line, go to again setting, type it 50. If you want to change the color from the styles, you can change. I'm keeping as it is. Okay, now if you look at it, the orange color line is 50 moving averages and blue color line is 20 moving averages, and I am checking 5 minute chart. So what is the logic behind this one? See, if this is the blue one is 20 minute and the orange one is 51, so if the blue line will cross the orange line, that means bullishness will come, and you need to entry at this position, where at this candle you need to enter at this candle and put stop loss below the orange lines. That's the crossover strategy for making the entry only with the help of indicator. But again, the trick here is we are checking in the already happened market or offline market. Even if you check the line live in the live market, you will get this line as it is. But the thing is, it's a late indicator in my point of view. Okay, in my point of view, maybe your point of view is different. But as a beginner, when I was started using this strategy, whenever I was trading, I got this strategy from the YouTube videos and from some books, and I thought, okay, it's very simple forward. What we need to do, we just need to check some crossovers like this one. Whenever crossover will happen, I will make entry, otherwise I will not make entry. I also done same thing, but this is the very late indicator, and most of the time I faced the losses. That's why I am not using moving averages for the intraday. Then when I am using, this is my personal opinion. Okay, before that one, let's plot the 100 and 200 moving averages as well. Moving averages. I will plot first. I will go to here. I will plot for the 100. Okay, and I will plot for the 200 as well. This is the standard values which mathematician comes here, or which researcher comes here. Now what I am doing is, I am just checking first 20 and 50, like with the multiple time frames. Like for example, I will check for the 1 hour. If you check 1 hour, it will play very important role for analyzing the stock. What I am doing is, one day before I am checking with the 1 hour, like tomorrow. Before tomorrow I am checking, okay, today market crossed this blue line with the orange line. That means buying will happen in the market. So what is my view for the tomorrow? My view should be bullish in the market. So with the help of this one, if candle forms above this line and taking support of this line, that means unless and until market is above this line, my view is bullish one only. Or let's say candles is also above this line and candles is also not crossing the orange line, unless this position, my view is bullish only, because market is taking support and moving upside, taking support, moving upside. But when market crossing this one, then I will not do unless and until this line cross this one. Once market again 20 moving average crossing, like blue line crossing the orange line downside, then I will change my view to the bearish view. Same thing I will check with the 1 day time frame. Okay, now if we can observe the bullishness in the bullishness in the market from this line. Okay, from this line. But what happened is, now candle is started trading below this line, so obviously some selling is happening. So what I am doing is, I am just checking multiple time frames. If you want to invest something, and if I want to analyzing the stock, then with the help of multiple time frames I'm using that one. But for the intraday, I'm personally preferring the price action, which we already covered in the previous videos and previous sections. I'm checking the moving averages, so I will clear with my mind what to do tomorrow and what is the my market psychology behind what is the market psychology. It will really help. It will really it really helping me to change my view or clear my mindset. Again, I'm telling you, for the trading, I'm not using moving average. I'm clearly using the higher high, higher low formation or pure price actions, which is obviously with my experience. I'm telling you, if you want, you can observe this moving averages by yourself, and just let me know your feedback of the moving averages. Again, which time frame you can choose. You can choose more than 5 minutes, 10 minutes, 5 minutes and 10 minutes for the intraday. For the long term, you can choose 1 day and 1 week to analyzing the stock or analyzing the moving averages. Hope you got my point and hope this topic is clear for you. I can see you in the next video. Thank you so much.